So in traditional investing, you'll hear a lot about averaging down, trying to lower your cost basis in order to capture gains. And I think, and many of us in the low price community, I'm not the only guy in day trading and swing trading says this, I don't think this is a viable strategy. And today I've got a chart to explain to you why I really don't think it is a viable strategy over the long term. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to subscribe as well as ring that bell to be notified as soon as a new video drops. You can see we've got a chart up today. Something I love to do is live screen share webinars where we're breaking down the stock of the day. And if you ring that bell, you'll be notified and you can be there live and ask questions and see us break these charts down live. So let's get started. As I mentioned, averaging down I do not think is a viable strategy, and I don't think it's a trap you should fall into no matter what the mainstream media, no matter what your old school investing books say, particularly in low price stocks, okay? I would like to make that delineation. Listen, if you're buying Microsoft, you're buying Apple, you're buying Amazon, maybe you could average down and make that work. But we trade in day trading and swing trading. We're trading very volatile stocks that tend to spike quickly and drop quickly. And I see a lot of newer traders fall into that trap of trying to take that, I would say, traditional, more investment mindset and apply it to these volatile stocks. So a classic example, maybe one of the best examples I can think of in recent history, is a chart I've got on the screen today. So this is CEI, and you can see, and I'll zoom in and kind of show you a little more detail, but if you average down on this stock, now keep in mind this stock's had a few reverse splits through the years. If you're not familiar with what a reverse split is, definitely check our other videos. We talk about it a lot. But you'll see how it spikes, drops hard, spikes, drops hard, spikes, drops hard, repeat, repeat, repeat. And listen, if you had averaged down in this stock every time it spiked and then failed, I mean, you would be ultimately never possible to get back to a profitable trade because this stock has faded for, I mean, this is a 10-year chart. You know, this stock has just faded for years, years, years. And notice, as I zoom, I mean, even here, look at this amazing bounce from $6 to $30 in a day. Immediately slams back and drops. So if you're trying to add to a losing position, averaging down into every spike, it's doing the opposite of what you're intending, because now you're buying those spikes, you're now trapped because it moves so quick to the downside, and then you're just getting to the point where you're getting ground to oblivion. And you can see as I zoom out, look at how the bounces just get smaller and smaller and smaller to the point where they're barely perceptible. I mean, I just zoomed in and you can see this stock bounced as recently as July. But as I zoom out, it's not even perceptible, that bounce. And let me zoom in here. Look at this. That bounce isn't even perceptible because this stock, every spike gets slammed. The reverse splits dilute the stock even further. It gets slammed or dilute the share count, and you will get trapped. You will never be able to get back to profitability on a stock like this. So keep that in mind. And I'm telling you, CEI, this is one of the worst stocks out there. I picked it for a reason because it might be the best case, best example of the worst stock to average down in. But this is not unusual in low price stock land. We love them for the momentum, the huge potential gains, but never average down into a loser. And a saying I like to use and be actually mentioned in the comments. I might have stole this. If you've heard this elsewhere, let me know. But I always say losers add to losers, winners add to winners, okay? And, again, drop me a comment if I stole that, attribute it. I would like to know who I got it from, but I've been saying it for years. And listen, if you're a winning trader, you're looking to add to losers. That's what winners do. Winners win, okay? If you're a losing trader, if you're inconsistent, if you're struggling and you're adding to losers, that's loser behavior. Your odds of success are so much lower. So Let me know if you've heard that quote elsewhere and where you've heard it. I'd love to know so I can attribute it. And then also, grab me a comment below. I'd love to know. I'd love to see the honesty. Have you added to a loser? And number two, feel free to say yes if you've added to a loser. But number two, let me know if it worked. I'd be curious to see in the comments how many people got, saved by adding to a loser. I'm guessing it's going to be single-digit percentage. It's not a winning strategy over time. So thanks a lot, everyone, and we'll see you in the next video. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.